Hey, this is Leticia.
And this is Matt. Catch us on the HREBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Free food, family fun, and great information await at the City of Arlington's 4th Annual Homeownership Fair, Saturday, August 10th from 9 a.m. to 2 p.m. at the Esports Stadium Arlington and Expo Center. Receive information on credit repair, down payment assistance, home buying 101, and much more. This is an event you can't afford to miss. For more information and a chance to win prizes, go to arlingtontx.gov/homeownership fair or call 817-459-6238.
Comida gratis, diversión en familia y excelente información lo esperan en la cuarta feria de propietario en la ciudad de Arlington. El evento es el sábado 10 de agosto, 9 a.m. a 2 p.m. en el Esports Stadium Arlington and Expo Center. Encontrarás información acerca de mejorar de crédito, asistencia del desembolso inicial y mucho más. Para más información y la oportunidad de ganar premios, visita el sitio web arlingtontx.gov/Homeownership Fair.
Programming for the HREBA show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
Hey, this is Leticia.
And this is Matt. Catch us on the HREBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Free food, family fun, and great information await at the City of Arlington's 4th Annual Homeownership Fair, Saturday, August 10th from 9 a.m. to 2 p.m. at the Esports Stadium Arlington and Expo Center. Receive information on credit repair, down payment assistance, home buying 101, and much more. This is an event you can't afford to miss. For more information and a chance to win prizes, go to arlingtontx.gov/homeownership fair or call 817-459-6238.
Comida gratis, diversión en familia y excelente información lo esperan en la cuarta feria de propietario en la ciudad de Arlington. El evento es el sábado 10 de agosto, 9 a.m. a 2 p.m. en el Esports Stadium Arlington and Expo Center. Encontrarás información acerca de mejorar de crédito, asistencia del desembolso inicial y mucho más. Para más información y la oportunidad de ganar premios, visita el sitio web arlingtontx.gov/Homeownership Fair.
Programming for the HREBA show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
Hey, this is Leticia.
And this is Matt. Catch us on the HREBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Free food, family fun, and great information await at the City of Arlington's 4th Annual Homeownership Fair, Saturday, August 10th from 9 a.m. to 2 p.m. at the Esports Stadium Arlington and Expo Center. Receive information on credit repair, down payment assistance, home buying 101, and much more. This is an event you can't afford to miss. For more information and a chance to win prizes, go to arlingtontx.gov/homeownership fair or call 817-459-6238.
Comida gratis, diversión en familia y excelente información lo esperan en la cuarta feria de propietario en la ciudad de Arlington. El evento
Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
Hello, you're listening to the REBA Show, Homeownership, Hear It from the Experts, here at the Blue Stream of the Fishbowl Radio Network. My name is Leticia Gallegos. I'm president and CEO of the Hispanic Real Estate Brokers Association, REBA, and co-hosting with me today is...
the one and only Salvador Villalobos.
Thank you, Sal, for being here. And today we're going to talk about consumer credit and home ownership. When you're going to purchase a home, it's always important to know what your credit is because you will soon find out. So that's important. We have some statistics that that Sal brought to my attention today that says, this is from the consumerfinance.gov website, the Consumer Financial Protection Bureau, that 45 million of U.S. U.S. adults have no credit, no score, or
They have limited score where they're considered credit invisible. Credit invisible means either they have no credit, they've never established any credit, or they have very limited credit, one trade line, meaning one credit card or one loan, and they don't, and not enough to generate a credit score because maybe it may be too new, or they've had credit in the past and just have not utilized any credit in a few years, haven't had any payments, haven't had any reporting. So that affects quite a bit of people out there. And that not only affects for mortgages, it affects for your car insurance, it affects for homeowners insurance, it affects for different things because there's no credit score to
right. And I'm sure
determine.
Right.
risk.
And I'm sure you as a listener, if you haven't checked your credit score lately, you don't know what to do. You're going to find all that out today on how you can do that and how you can do it at no charge. And it's available to you on some websites, and we'll share those with you in a minute. So when it comes, Sal, to mortgages,
Right.
because the show is about home ownership.
Sustainable home ownership.
Sustainable and home ownership as a whole, of course, you want to sustain it once you purchase it. So today we're talking about your credit as it pertains to home ownership.
Correct.
So there, Sal, what does a lender, what are the types, or give us some more information on mortgages as they can be acquired by a borrower?
Well, there's different types of mortgages. There's traditional, credit. Let me start over. There's different credit types. There is the traditional credit report, traditional mortgage credit report, and then there's the non-traditional mortgage credit report. We'll touch a little bit more on the non-traditional in a bit. Your lender is looking to assess creditworthiness of the applicant or applicants because they do require a credit report for every applicant that's going to be on that mortgage. We want to make sure, because we're going to be using their income, we also want to make sure that their income is not going to be impacted negatively by some other accounts that they may have, or they're not financially responsible. So the lender is going to look for, they need to have at least 2 credit scores, all right, on a credit report. So it's called a tri-merge credit report. This tri-merge credit report comes from one of your credit agencies, such as a Kroll Factual Data or Credco. They compile this information from different credit bureaus, such as Equifax, Experian, and TransUnion. Okay.
And we'll talk about more credit bureaus later on in the show, for sure.
Exactly. So an underwriter needs to determine, again, the creditworthiness of the applicants, whether it's 1 applicant, 2 applicants, 3 or 4 applicants, because you can have multiple applicants, and we need to assess their credit report.
And we're talking about traditional
credit report.
traditional mortgage credit report.
Right.
Okay.
And this is for both types of automated underwriting as well as for manual underwriting. Manual underwriting is when you have a live underwriter that is underwriting the file based on the actual guidelines set forth by either Freddie Mac, Fannie Mae, or FHA, or VA for that matter, or USDA. They don't deviate from the actual guidelines. But with automated underwriting, based on your credit score, based on your debt to income ratio, based on which is the amount of debt that you carry against your income, based on the amount of loan against the value of the home, and your credit score, they may have less requirements, not less requirements, but you don't have to produce as many documents. You may only have to produce one pay stub, 1 year's worth of bank statement. 1 month worth of bank statements.
Okay.
So that's why it's important to use the automated it's important to know what your credit scores are, because it's going to ultimately either negatively or positively impact your ability to buy that home.
Mm-hmm.
With the automated underwriting, it makes it a little more or less restrictive when you're buying a home. They may allow you to go a little higher in your debt to income ratio, which is typically about 43% on FHA, and on conventional financing. It may allow you to go as high as 50% of your income going towards debt, meaning housing expenses, credit card expenses, loan expenses, mortgage. So in some cases, the system on the automated underwriting system assess the risk, so you may be able to go a little higher, right?
Okay.
So that's the importance of having good credit and a good credit score, higher credit score.
Mm-hmm. All right, and so that's the traditional means. Now you talked about manual, desktop underwriting, or
desktop underwriting.
Okay, so the manual underwriting is separate. A separate process.
It's a separate process. It's more time consuming. They have an actual manual that they have to follow. They can't deviate.
What would cause someone's application to go to manual underwriting?
Either the automated underwriting system may not approve them because their debt to income ratio, the amount of debt that they carry against their income, may be higher than what is allowed. They may have a credit score that doesn't meet the minimum requirement, but it likes the overall profile of the picture. Good deposits or reserve requirements. They may have 3, 4, 10, 12 months worth of reserves, meaning that they're good savers. They may have a good credit history, but not the right mixture of credit, meaning revolving credit, a fixed loan.
Okay.
So there may not be that right mix, and we're still trying to figure out what that right mix is, but then their credit score is a little lower. They may be at a 600 where because it may be newer credit or just not, they may have the trade lines, but they have not been utilized. They may have lower credit scores that may not be indicative of their true credit profile, so then a live underwriter would need to assess that to determine if they are creditworthy.
Okay. All right. So today we're talking about consumer credit and home ownership. And Sal Villalobos we're talking about traditional mortgage credit report. So would you say, Sal, that if you are rejected by the automated desktop underwriting, then you'd have a chance to go in manual underwriting?
Right. There are different degrees of decisions within that credit model. So yes, we're always looking to help our homeowners or our applicants. We want to make sure that we are acting in their best interest. So if for some reason it does not, it's referring us to a manual underwriter, then we will send them to a manual underwriter. We will always look ways to help the client. We're not going to put them in, we're not going to try to circumvent the system. That's not what we do. We do is help them try to become a homeowner, because they may have, again, some kind of error on the credit report.
Right.
The system's not correctly assessing their creditworthiness. So manual underwriter is going to go in there and take the time to verify every aspect of that file as per the agency that they use, Fannie Mae, Freddie Mac, FHA, VA, USDA. They're going to look at how they can best help that client. In some cases, the alternative is not at this time, and then we sit down and we come up with an action plan, so that hopefully within 6 months, a year, in some cases it's only 3 months, they may be in that situation where they are at the closing table.
Right. Okay, so because the system may not always be right. It may leave something out when it's doing it automatically or
Correct.
automated. So what time frame are we looking at when we look at the credit report that you pull on a mortgage? How long is it good for? When you're
Well, typically, your credit reports, we're going to use them for about 90 days if you're not under a contract. Okay.
Okay.
Over 90 days, other things can materialize during that period of time. So between the time they come in and do a pre-approval and 90 days, they have that period where we can use that same credit report as long as they're closing within that 90 days. Typically, we're not going to go over 120 days. So potentially you can go up to 120 days if you go under contract on day 90 and you can close within that 30-day window. You should be okay, but I wouldn't risk that for the reason that you may not close in that 30 days and we have to pull a new credit report.
Right. Plus, there's interest locks and all that stuff. That's a totally different subject.
Correct.
But listeners, if you want to join our conversation, be part of our conversation. If you have an experience or want to share some information about a credit report or something, you can call us. Our phone number here is area code 214-431-5062. We're going to take a short break. And my name is Leticia Gallegos, and with me is
Salvador Villalobos.
Salvador Villalobos. And we're talking consumer credit and home ownership. Catch you on the other side of the break. Hey, this is Leticia.
And this is Matt. Catch us on the HREBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Free food, family fun, and great information await at the City of Arlington's 4th Annual Homeownership Fair, Saturday, August 10th from 9 a.m. to 2 p.m. at the Esports Stadium Arlington and Expo Center. Receive information on credit repair, down payment assistance, home buying 101, and much more. This is an event you can't afford to miss. For more information and a chance to win prizes, go to arlingtontx.gov/homeownership fair or call 817-459-6238.
Comida gratis, diversión en familia y excelente información lo esperan en la cuarta feria de propietario en la ciudad de Arlington. El evento es el sábado 10 de agosto, 9 a.m. a 2 p.m. en el Esports Stadium Arlington and Expo Center. Encontrarás información acerca de mejorar de crédito, asistencia del desembolso inicial y mucho más. Para más información y la oportunidad de ganar premios, visita el sitio web arlingtontx.gov/Homeownership Fair.
Programming for the HREBA show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
Hey, Hey, this is Leticia.
And this is Matt. Catch us on The REBA Show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Free food, family fun, and great information await at the City of Arlington's 4th Annual Homeownership Fair, Saturday, August 10th from 9 a.m. to 2 p.m. at the Esports Stadium, Arlington and Expo Center. Receive information on credit repair, down payment assistance, home buying 101, and much more. This is an event you can't afford to miss. For more information and a chance to win prizes, go to arlingtontx.gov/homeownership fair or call 817-459-6238.
Programming for the REBA Show is proudly
Comida
underwritten
gratis,
in part
diversión
by
en
the
familia
Arlington
y
Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
Hello, everyone. You're listening to the REBA Show, Homeownership. Hear it from the experts in the Blue Stream of the Fishbowl Radio Network. My name is Leticia Gallegos, President and CEO of the Hispanic Real Estate Brokers Association. And co-hosting with me today is
Salvador
Villalobos.
Villalobos.
Okay. And we're...
Or Chava, as my friends call me.
And our topic today is consumer credit and home ownership. Credit sometimes can be a bad word to a lot of people. I mean, we try to not know what's on our credit report because we're afraid that it may be on the negative side. But you'd be surprised how many times lenders go into a credit report and it's not that bad, and you do qualify for a mortgage. So don't be afraid when you're looking to stop renting and ready to make the leap into home ownership, that you one of the first things, right, Sal, is to talk to a lender. They'll pull the credit report and they'll tell you whether you're ready, right? Or
so what we'll do is they'll come in, we'll discuss what their plans are. It's a full assessment, and we'll look at their credit report right there on the spot. We'll get a copy of the credit report. I always tell my clients, you have two options: either buy now or you buy later, right? Sometimes we have to prepare that client. Sometimes they come in for whatever reason and they start talking to us, possibly, in about a year or 2 years. We sit down, we look at their credit, we ask them questions about, reserves or down payment, income, and, within about 3 months, they're already in their new home. And their intention was maybe get prepared and possibly buy something in 12 months to 2 years.
I said, so the key takeaway is be positive about it. And any mortgage consultant will tell you the truth, whether you're ready now or whether they can put you on a there's various programs that lenders have to put you on pace, roadmap to home ownership.
Correct.
A roadmap to home ownership, whether it's paying off a credit card, paying off some kind of debt, and prepare you for home ownership.
Right. In some cases, it's not paying off. It might be paying down a credit card.
Okay, there you go.
It may be that you're on, your older parents put you on their credit card because, as an authorized signer, because, you can do their banking for them or their inquiries. That can affect, it doesn't mean that they have bad credit. It just means maybe they have a higher balance, and unfortunately that is being taken into consideration when it's scoring your scores, your credit scores.
And when you're comparing to your income.
And debt-to-income ratio. So,
okay, good. All right, so if you want to be a part of the...
not so much to your debt-to-income ratio because you're an authorized user. As long as we can determine that you have not accessed that account last 12 months or so, or since the inception of that card, we don't necessarily have to consider it. We just have to document the fact, but it does impact your credit score, and that's when it becomes an issue.
Okay, great. So if you wanted to be part of the conversation, call us at 214-431-5062. Again, it's 214-431-5062. If you have any kind of question, our experience, we may have gone through that before, and we can answer your questions. So before the break, we were talking about traditional mortgage credit report.
Right.
So let's continue that conversation for a few more minutes, Sal, about the traditional mortgage credit report. Go ahead.
So again, every applicant must have a credit report. That credit report must name the name of the company, right, that's pulling the credit report, because we're not allowed to use a different credit report, different lender's credit report. Some clients they'll come in with the misconception that if we pull their credit report, if their credit report was pulled by another lender, say a week ago, they don't want their credit report pulled again. Why? Because they believe that it's going to impact your credit score. As long as it's within a 30-day window from the first lenders requesting that copy of that credit report, a second lender may do so. If you can go and shop for a car, if you can go and shop for clothes and furniture, why can't you shop for the best financing options for yourself during a small window? You shouldn't be impacted negatively. So if you're being told, oh, you can't get your credit looked at again, and we just happen to see that we just happen to pull your credit report this week, don't take that as that you can't have somebody else also look at it.
Okay.
Because another lender is not going to be able to use your credit report. They're going to have to pull their own credit report. And so again, you have that 30-day window.
Is that 30-day window, can it be extended in any way?
No.
Or it's just 30 days?
30 days.
Okay.
That's not our guide, because things can change on materially. It can change within 30 days or after 30 days. So here they give you a 30-day window so that you can shop around at different lenders without it impacting your credit score.
Okay.
Case in point, I just helped a lady. She was with 3 different lenders, and she came to me about a week before I was going to hit the 30-day. It didn't impact her score at all. If anything, we found some errors, and we were able to get those corrected. Okay. So it didn't impact her negatively. In some cases, they are with the best lender, the first one, but at least right?
Okay.
At least you know. So it has to have the name of the mortgage company that's ordering the credit report. It has to name the agency that it's reporting, that's compiling the information from the credit bureaus, TransUnion, Equifax, and Experian. Must list the name of the applicants plus the borrower, okay, or the joint borrowers. Now, let's say you are in what's called a community state, such as Texas and California and Arizona, where there's a non-borrowing spouse, whether the husband's buying the is applying for a mortgage and the wife isn't, or the wife is applying for a mortgage and the husband isn't. They will. We as lenders are required to take into consideration that non-borrowing spouses' debt, not their income, just their debt, and included in their debt-to-income ratio. Meaning, we're going to consider the spouse's debt plus the non-borrowing spouse's debt plus the applicant's debt against the sole income of the applicant. Does that make sense?
On all loans?
On when you're buying your primary residence.
Oh, okay, primary. But okay, all right. All right. So let's say that you pulled, or the company that you use pulls the credit report, right? So there's 3 credit scores.
Correct.
Which one do you use?
Yes.
All 3?
All 3. Why? Because on a tri-merge, we're going to get 3 credit reports. I mean, 3 different bureaus, TransUnion, Equifax, and Experian. Each one may have their own score, right? So we will use typically the middle of 3 scores or the lower of 2. You have to have 2 credit scores. So let's say that TransUnion has a score of 780. Equifax has a score of 697. And Experian has a reporting score of 650. We're going to take the 697. Or let's say that you only have 2 scores. Experian is 800, but TransUnion is 620. We're going to take the 620 all day long because it may give us a broader view of their credit history, because not every creditor reports to all agencies or credit bureaus. Now, let's say that you have two borrowers, a husband and a spouse, or two brothers, or whoever, two joint applicants. They will take the lower middle score of the two applicants, or the lower score of the two applicants if they only have two credit reporting. We're always going to go with the. So if you have two borrowers, whether they're married or not married, we are going to use the middle score of the lowest scoring borrower. So
All right. Now there'll be a test on that, listeners, before we leave today. So that is a little detailed.
Yes.
So, but normally everyone has 3 scores. So you would take the middle score usually.
right.
Okay.
And that
Bottom
could
line.
be the middle score, the lower middle score of the
Right.
two applicants.
Okay, perfect. All right, so we're talking about consumer credit and home ownership. And so we've talked about traditional, or do we still have more information on traditional, or do we go on to non-traditional?
I mean, I would always suggest talking to your lender to get more detailed information. Certain lenders have certain requirements regarding credit, the amount of income against their the amount of debt against their income, the credit score requirements. So I would say talk to your lender to get the best advice
on your particular situation.
on your particular situation, right?
All right. Okay, so let's move on to what we call non-traditional mortgage credit
Right.
report.
So non-traditional mortgage credit, what is that? Or why do we need non-traditional mortgage credit opposed to traditional credit? Well, again, the CFPB, based on their data, states that 45 million adult Americans are either credit invisible, which means that they're either new to credit, have not established any type of credit, no credit cards, no installment loans, no student loans, nothing. They're credit invisible. Or you have somebody that has one trade line, meaning one credit card or a newer credit card. They have, or you've had credit in the past, but you have not extended and you don't maintain an active credit line. Again, could be installment loans or credit cards, revolving lines of credit, a mortgage. You have not had an active account for the last 4 or 5 years. So you're also credit invisible. You might have had a stellar credit reporting history prior, but since you're not active anymore, that's going to impact you. So non-traditional credit is it's a credit model that, example, FHA at the moment, Fannie Mae and Freddie Mac were entertaining this idea for a few years. But last year they had they had stated that they were not going to go forward with a credit model, a more relaxed credit model, such as the alternative credit or non-traditional credit report, which is compiled of either utility bills. If you have a landlord, a management company that we can verify 12 months, insurance, car insurance. If you're paying at a company where you buy here, pay here type of companies, but we can document a 12-month history of these payments, we may be able to use that credit. We will collect that information. The credit reporting agency is going to then contact that creditor to verify that you do have an account, that if you were late. So they're essentially generating a credit report based on alternative credit or non-traditional credit. You still can, do the normal financing through FHA. A lot of people will say that, we have a special program. That special program is FHA. It allows you to use non-traditional credit. And with that non-traditional credit, they compiled the history. Your underwriter will have to do what's called a manual underwrite because there is no credit score generated. But they're going to see that, yes, you've had this account with a furniture store for the last 18 months and you've never been late. your payments have been on time. You have your utilities, your gas bill, your phone bill. They'll show a 12 or 24-month history of being on time. You're paying your landlord. You can document that you write a check every first of the month, and it's there. And you can document that with your bank statement showing that it's coming out of your account and you're on time every month. That's another way of that an underwriter may take that into consideration.
Okay. So what I'm hearing from you is that traditional mortgage credit report would be traditional would mean you pull it from a credit bureau.
Well, from a credit agency.
Credit agency.
Right.
Okay. So a non-traditional are credit lines that don't report to a credit bureau or agency.
Right. So you have ABC Bank. ABC Bank will contact or will report to Experian or TransUnion or Equifax. So they give them a complete history, past 24 months, 7 years. When they opened the account, what was the highest limit that they used, what is their current balance, what is their current limit, what is their monthly required payment, what was their last payment.
Right. And that's traditional.
That's traditional.
So when we talk about non-traditional, that's not happening.
They're not reporting.
Right, they're not reporting.
The landlord is not going to call Equifax or any of these companies.
So what made FHA is offering this now?
Has been offering it.
Has been offering it, yes. So we're throwing around some names here. So I want to make it clear for you, listener, that about these companies or agencies that we're talking about. When we say Freddie Mac and Fannie Mae, they're
agencies.
Lending.
Right. Their agencies are how that dictate or set forth certain guidelines that lenders have to abide by to make sure that these applicants are creditworthy, they have the sufficient income to purchase the home, that they have the sufficient reserves to go forward.
Okay, so then we have Freddie Mac, Fannie Mae,
which
and
are private now.
Private,
right? And
then we have FHA, which is a government agency.
Right, a government agency, so they're self-insured. We also have USDA, so also another government entity.
Okay, so those names are of those agencies that put together those guidelines for lenders to use to lend you the money as a borrower. When we
so credit could be extended. They don't necessarily lend you the money. It's the
guidelines.
The lender, right? The lender lends you the money. We follow agency guidelines to be able to facilitate the funds to purchase a home.
Okay.
Or refinance or building.
Right. And then when we say TransUnion, Equifax, and Experian, those are the bureaus, the credit bureau agencies.
Right. Those are the ones that compile the information from the creditors that are reporting to them on each individual applicant.
Okay. So we're talking today, listeners, about consumer credit and home ownership. And we're going to take a quick break. And we've been talking about traditional mortgage credit reports and non-traditional mortgage credit reports. And if you have questions about that or want to join the conversation, be part of the conversation, our number is 214-431-5062. We encourage you to ask your questions or tell your story, and we'd love to hear that. So we are going to take a quick break, and we'll see you here after the break.
The flip side. Jump in.
Hey, this is Leticia.
And this is Matt. Catch us on the REBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Free food, family fun, and great information await at the City of Arlington's 4th Annual Homeownership Fair, Saturday, August 10th from 9 a.m. to 2 p.m. at the East Sports Stadium, Arlington and Expo Center. Receive information on credit repair, down payment assistance, home buying 101, and much more. This is an event you can't afford to miss. For more information and a chance to win prizes, go to arlingtontx.gov/homeownership fair or call 817-459-6238.
Comida gratis, diversión en familia y excelente información lo esperan en la cuarta feria de propietario en la ciudad de Arlington. El evento es el sábado 10 de agosto, 9 a.m. a 2 p.m. en el East Sports Stadium, Arlington and Expo Center. Encontrarás información acerca de mejorar de crédito, asistencia del desembolso inicial y mucho más. Para más información y la oportunidad de ganar premios, visita el sitio web arlingtontx.gov/homeownership fair.
Programming for the REBA show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
Hey, this is Leticia.
And this is Matt. Catch us on the REBA show every Tuesday from 2 to 3.
On our show, you'll be able to hear from the experts, everything about home ownership. Tune in on Tuesdays at 2 on the Blue Stream.
On FishbowlRadioNetwork.com. Jump in.
Free food, family fun, and great information await at the City of Arlington's 4th Annual Homeownership Fair, Saturday, August 10th from 9 a.m. to 2 p.m. at the East Sports Stadium, Arlington and Expo Center. Receive information on credit repair, down payment assistance, home buying 101, and much more. This is an event you can't afford to miss. For more information and a chance to win prizes, go to arlingtontx.gov/homeownership fair or call 817-459-6238.
Comida gratis, diversión en familia y excelente información lo esperan en la cuarta feria de propietario en la ciudad de Arlington. El evento es el sábado 10 de agosto, 9 a.m. a 2 p.m. en el East Sports Stadium, Arlington and Expo Center. Encontrarás información acerca de mejorar de crédito, asistencia del desembolso inicial.
For the REBA show is proudly underwritten in part by the Arlington Tomorrow Foundation, contributing to a thriving Arlington, and in part by the Texas Association of Realtors Housing Opportunity Foundation. Funding is also provided by generous donations from listeners like you.
Hello, you're listening to the REBA show, Homeownership, Hear It from the Experts, in the Blue Stream of the Fishbowl Radio Network. And my name is Leticia Gallegos, and I'm the President CEO of the Hispanic Real Estate Brokers Association, HREBA. And today we're talking about consumer credit and home ownership. Your credit is important when it comes to home ownership, and it's important that you know what type of credit you need or what type of loan you can obtain based on your credit. So we have talked about the traditional mortgage credit report, the non-traditional mortgage credit report, and we're going to continue our conversation on non-traditional, because you may have some bills that you pay on a monthly basis that are not reported to the credit bureau, like your rent, a cell phone, some furniture purchase that you made. Even your car may not be reporting to the credit bureaus, and we call that in the mortgage business, it's called non-traditional credit lines.
Right, non-traditional. Yeah, I said right, non-traditional credit lines.
Non-traditional, yes. So So Sal, continue the conversation about. But if you're listening and you have a question, please don't hesitate to call us. We're at 214-431-5062 is our number. If you have a question or a comment, please join us. So Sal, let's continue the conversation as far as the non-traditional. We talked briefly about that.
Right. So on your non-traditional credit report, the underwriter is looking for 3 credit trade lines. So on the non-traditional, it can be one from what's called a Group 1, which is rental housing payments, which are subject, again, to independent verification if the borrower is a renter. Utility companies, which is not included. So, okay, you can't say you're paying $1,000 in rent and they include your water, your electric, your cable. That's not considered a utility. That's considered your rental payment. But you are allowed to use utilities such as gas, electric, water, a landline telephone, home service, and cable in your name, right? And you can document that you've been paying it. How are they going to document it? They're going to contact that individual. They're going to contact that individual utility company. They're going to contact that rental rental management company. They also have what's called, and you can have one of these trade lines. You don't have to have all of these trade lines. The other group that you can have trade lines in is insurance premiums that you're paying. Not that they're taking out of your payroll. It has to be an effort that you put forth every month to make those that insurance payment, as well as the rental payment. It can't be, utilities again can't be included in your rental payment. They have to be individual. Your insurance has to be paid on a monthly basis through your checking account that you're paying, not setting up on an automatic withdrawal. You're writing them checks. Also, child care providers, if we can document that. School tuition, again, these cannot be automatically deducted from your accounts. Your internet and cell phones, you can use this. This is not part of your landline or your internet. Group 1. Again, there's 3 groups. Group 1 gives you the strongest credit profile because it's rental and it's utilities paid out of your pocket month in, month out. Again, not automatic deducted or included in some other payment. There's a Group 2. That Group 2 is insurance premiums, your car premium, your health insurance premium. If you're renting, renter's insurance, medical, life, as long as we can document that's great. Tuition, retail store credit cards. You have a small shop that they're using they carry their own books. They're they're buying there, they're financing there. As long as they're keeping proper accounting and they're willing to talk to the credit reporting agency, who's going to be calling to verify that information is up to date, their mortgage payments.
So I have a question, Sal. Why do they not accept automatic draft payments?
Because you're not putting any effort to actually make those payments. They're going in and withdrawing the money out of your account.
Oh, I see.
Yeah, you're not.
So the effort is behind it.
The effort is behind there. They're trying to see creditworthiness.
Oh, okay.
Now, if it's coming out of your payroll, there's no effort on your part. It's your employer taking the money out.
Okay.
If you're paying for utilities through your rental payment, again, you're making one payment to the rental company, but you're not separating the payments.
Okay, got it.
They're trying to give you every opportunity, but they also have to make sure that you have the ability to repay based on your performance.
Okay.
Documented performance.
All right. Very good. So we've talked about traditional mortgage credit reports, non-traditional mortgage credit reports.
There's also Group 3 that I did not touch
Okay.
base. There's also auto leasing payments. That's a Group 3. And 12 months worth of cancel rent checks.
Okay.
Okay.
Okay, great. And we've talked about the traditional mortgage credit report, the non-traditional mortgage credit report, which you just finished up.
Right.
We've talked about credit bureaus.
Right.
The 3 credit bureaus that would report on your traditional, and then I wanted to share with our listeners that there is a website that you can go to and get your free credit report. Now, there's agencies out there that offer free credit reports, but this, I believe, is a government agency that says you can have pull 3 credit reports a year. And the way that I recommend that consumers use this is if you're allowed 3 credit reports a year.
You're only allowed 1, but you can request with the 3 different credit report repository, 3 credit bureaus: TransUnion, Equifax, and Experian. When you go when you log into that website and you're requesting the copy, because by law you are entitled to get 1 free credit report per year per repository. So you can go to the credit to the website that you're going to.
It's called annualcreditreport.com.
Okay, so they're going to go to the annualcreditreport.com. They're going to request a copy of the credit report, but you want to obtain a copy from Experian, Equifax, and TransUnion.
So you're recommending they do all 3 at once?
Yes.
Or one
You want to see what's on
change.
each. You want to see what's on each
Okay.
credit report, because
Okay.
there can be something reporting on one that's not reporting on the other.
Oh, okay.
You may have paid a credit card off and it's not reporting. You may have paid a car off, it's not reporting, or there's collections on one that's not on the other.
Okay.
That's not a good surprise to have after you believe that you have a certain credit score because you only pulled 1 trade line.
Okay, great. So we've been talking today about consumer credit and home ownership.
Right.
So we've been streaming live on Facebook, and our hope is that you engage with us, listeners. If you have information or questions about this topic, you can go to our website at rebaconnect.org. We have more information there. And we are the Hispanic Real Estate Brokers Association, a registered 501c3 nonprofit corporation. Like I said, we've been streaming on Facebook. You can see a replay of this video on the REBA Show Facebook page and also on our YouTube channel. And please follow us on Facebook at REBA Show and on Twitter as well. And this episode is also available on podcast on our website. You can learn about more topics that we have planned for upcoming shows on our website, rebaconnect.org, and it's spelled HREBA, connect.org.
I was going to say that.
And click on the REBA Show. And, of course, if you'd like to make a donation to us so we can continue this educational program, you can also visit our website and click the donate button. If you have specific questions or comments, you can email us, rebashow@rebaconnect.org. Again, my name is Leticia Gallegos. I'm the president and CEO of the Hispanic Real Estate Brokers Association. With me today,
Salvador Villalobos.
Sal Villalobos. Thank you for listening, and have a great afternoon, everyone.
Take care. See you next week.